Silver didn't just break 80. It activated it. 84.52 into the weekend. That wasn't excitement. That was mechanics. Now the market has to respond. What changed Friday? A weekly close above 80 activates mechanics, not emotion. Mechanics. Above 80. Shorts begin covering. Systematic funds increase long exposure. Breakout traders enter. Volume expands. Next resistance shifts toward 90. This is not speculation. Trend-following models respond to thresholds. 80 was a ceiling. Now it becomes a pivot. If price holds above it next week, positioning continues to rebalance. If it falls back below quickly, it becomes a failed breakout. That distinction matters. The macro overlay is not neutral. At the same time this breakout occurred, the president signaled consideration of a limited strike on Iran. A U.S. military buildup is underway. Oil rallied more than 5% this week. And after a Supreme Court tariff setback, a new 10% global tariff was announced under alternate authority. That combination is not calm. Military risk plus tariff escalation equals sign volatility premium. Markets price probability before clarity. If escalation increases, safe haven allocation accelerates. If rhetoric cools, volatility premium can unwind quickly. Silver is now sitting above 80, with global instability layered underneath it. That is different than a clean technical breakout in a quiet macro environment. March comex still matters. Open interest remains elevated into first notice. Likely 11,000, 14,000 contracts, roughly 55-70 million ounces equivalent. Registered remains under 90 million ounces. That is not collapse, but it is compression. If price rises while registered stays thin, delivery math tightens. If price rises and registered rebuilds, pressure releases. Watch inventory behavior next week. Not just price. Shanghai reopening. Shanghai reopens next week. This becomes a confirmation moment. If Shanghai premium expands while silver holds above 80, physical demand confirms the breakout. If premium collapses, volatility compresses short term. Paper must eventually reconcile with physical. Next week begins that test. What would invalidate momentum? Here is the failure condition. If silver falls back below 80 decisively, and the dollar strengthens materially, and registered rebuilds above 100 million ounces, then the breakout pauses, not ends structurally, pauses. Without those, this remains expansion. Scenarios and probabilities. Continuation toward 90, approximately 40%. Positioning rebalances. Dollar stable or soft. Geopolitical premium persists. Most likely near-term path. Volatility pullback into 80, 82, approximately 30%. Breakout digests. Dollar firms briefly. No structural damage. Healthy consolidation scenario. Escalation spike, approximately 20%. Military action increases. Oil surges. Silver reprices quickly. Step function move. Failed breakout, approximately 10%. Macro cools rapidly. Dollar rallies sharply. Silver falls back under 80. Requires multiple variables aligning. Bottom line, 80 was not symbolic. It was mechanical. That mechanical trigger has now fired. The structure beneath silver did not relax. Industrial demand remains strong. Monetary pressure remains present. Supply remains constrained. This was not hype. It was alignment. This is what surviving the middle looks like. Now we watch whether 80 becomes support or a trap. We'll monitor dollar behavior, inventory shifts, and Shanghai premium closely. Silver forecast will be back with the next update.